Hello and welcome to Crypto Weeklies. In this video, we analyze the Sol bounce. None of the content is financial advice. So price of Sol is at around $83 from the Fibonacci levels drawn from 2021 top or 2025 top, which is essentially at the similar level to the 2022 bottom, late 2022 bottom. The Fibonacci levels, again, none of the content financial advice. The Fibonacci levels at around 0.28, 0.236. That's where the support for Sol was obtained in early February 2026. You can see in the prior cycle or prior version of the bearish phase of 2025, the support that Sol got was at around 0.382. So these levels are somewhat of a mathematically derived but still relevant to the human emotions in the market. The 0.236 at $68. If this gets held as a macro level of support, and then there is a rally from here, the next logical target, again not financial advice, is the 0.382. That could be a level where Sol could just go out of that level and then kind of struggle like it did back from the 2025 April bottom to that two levels up and then one level down over here. But again, that was a bull in the middle of a bull run. This time around in the bear market year of 2026, one could be more cautious that the target could be at around $105. That's one. Another reason for that is right now the 20-week simple moving average for Sol is at around $126. If we were to project this out, again, this is a steep decline in the 20-week simple moving average, this red line over here, and trying to do justice with that ongoing decline. Let's say the price rallies up. Again, price does not go straight vertical line in a bear market. Again, I know their volatility in bear market is higher to the upside, but still, again, we're trying to be reasonably optimistic. Let's say 2 to 3 weeks of bullishness in March of 2026. If that kind of materializes, the 20-week simple moving average could meet the 0.382 and the price at around $105. And again, the logical conclusion in the bear market is that using historical evidence is that this red line over here, once that bear market year of 2022 started, Sol was not able to go above the red line. On the contrary, whenever the price rallied to that red line, which is the 20-week simple moving average, Sol ultimately met a resistance over there and then had to push one leg below. That held true even as late as about early November 2022. Again, no one knew that at that point that FTX would collapse and resulting in a Sol bottom. But nonetheless, you can see that the 20-week simple moving average essentially held resistance till January 2023, and then Sol started holding that 20-week as a support and build a solid foundation over here, only to rally again from that $20-21 target in bottom in October 2023 to that $300, roughly speaking $300, more than or around 15x of that lows from that lows in 2020, 2022 and 2023. And that peak for Sol came in early 2025, unlike in 2021 where the peak came in November 2025, whereas this time around it came in January 2025. So what could Sol do in the short term? Again, using this analysis, again, price could rally if there is a positive seasonality in March. In the next 2 to 3 weeks, price could rally at around $105. If not, if there is a correction, the first level of support that's all again proved some support at that level. There could be a double bottom over here, like there was a double bottom essentially from that November 2022 bottom to January 2023 bottom. Again, I'm not arguing that the price of Sol cannot go lower than that in the remainder of the bear market year, but at least again in the shorter term, whenever these ranges are well established, like over here or over here at that around $31 level, that the asset has a tendency, that Sol has a tendency to spend months at those level where the volatility in the market gets diminished. Again, one could argue similar thing in from November 2025 till January 2026 at around $130 level. Then there was one major drop, and then again flat line for a couple of months, then maybe at around $80 or maybe at around $70, and then one more leg bottom. Maybe again that's a discussion for using another models. We have those models at cryptoweeklies.com, link on the bottom of your screen. This is my own website. So starting with the first major model is the diminished decay model. We'll start with the regression based model, mathematically derived fair value and undervaluation zone using diminished volatility approach. So again, these the thickness of this residual, the one standard residual, is not constant, as this model is decay based models. That means again, the bottom for sol for this bear market without major undervaluation for the asset class is at around $55, and that level anytime sol if falls below $55 levels, that's when again making some predictions related to sol's macro bottom makes some sort of a sense. At this point again, this early into the bear market year of 2026, one could be slightly more it makes more sense to be slightly more bearish at this point, this early into the bear market. And then again, worst case scenario, just trying to tag the macro bottom again. There are no guarantees that price has to go to this green line over here. If it were to go down to that level at around currently at around $25, $26 with slightly bearish bias, that could be again looking for some of the best times to DCA, but again there are no guarantees that the price has to go there. The further that we fall into the residual bands, the likelihood that the price goes as low as around $25 is only 5%. One could say even lower than that, 2.5% chance, 2.5% chance that price has to go there. Again, this $55 level, again, one could, with one standard deviation residual, one could make a case that around 16-17% chance that price has to go lower than $55, and in a bear market year, that kind of materializing at below $55 sol is not too outlandish, considering that the price went as low as about $66 or $67 in February itself. So that's the first model. Projecting out is always harder to do that, but let's say if we were to use this model to project what the theoretical peak for sol could be, let's say in 2028, where if the altcoin season were to begin at that level, the bullish case at that point is at around $830. The base case is at around $233. The bear case, again, one would imagine by that time the bear case would have already materialized. This time around, the worst case in the bear case scenario is at around $25, $26 at this point. Projecting out, again, you can see how this is calculated using regression based approach, the polynomial regression based mathematically derived fair value, and adding those residuals to identify undervaluation zones as well as the overvaluation zone, not just what it could do in the bear market but also in the bull market, using the same regression based approach, using residuals to the top. The non-euphoria peak for sol at this point is at around $240, but if you were to project this out and try to come up with a band where price could go in a hyper bullish case is at around $500 with the data that we have, and if you were to project it out, as mentioned previously, an $800 sol would not be too outlandish to expect in 2028, 2029, with the caveat that sol survives this bear market like it did back in 2022, as well as there is a decent alt season in that time period of 2028, 2029. So where we can go from here is time weighted average price model helps identify the gravity of time based analysis, not just look at the current price through the lens of simple moving averages, but also where the asset has spent its entire life. The blue line over here is better understood as a gravity of time based average, where has the price essentially spent most of its time. If you take undervaluation and overvaluation together, and try to normalize the behavior of an asset throughout its lifetime, you get something like this blue line, which is the time weighted average price. Whenever the price is closer to the time weighted average price, right now it's very close to the time weighted average price, there is only 3% difference. That means that essentially this asset is in its natural state, neither overhyped nor ignored. Undervaluation is where you are essentially beating the clock by entering at level where the market has historically spent very little time. So for example, in 2022, the difference between the price and the time weighted average price at the bottom was 80%. I'm not saying that it has to repeat something similar, but let's say 40% lower from the time weighted average price without that panic case drop is something I look forward to for Sol. Again, I'm not bearish on Sol in the longer term. It's just right now in the bear market year, a 40% drop from $85 Sol, which is the $85, which is the time weighted average price for Sol, could take again $32 lower than $80. Then subtracting that, the $32 from $85 takes the price action closer to that $55 target as spoken previously. That's also confluent with the regression based bottom as well. So $55 Sol in 2026, again per my interpretation, could be a area where DCA or dollar cost average makes some sort of a sense using historical models as a guideline. Again, not financial advice, but again, right now the asset is in its natural state as it is closer to the time weighted average price. If you again, and in the bull market years, you can see this model can be used to understand what the, again, right now the risk level is 1. In bull market years, typically when the risk level goes above 8 or 9, that's when again, let's not toggle off 8, 9 and 10, that's the peak. Again, one could argue as in 2024, 2025, risk level 10 wasn't achieved. Maybe this time around risk level 9, that's where the peak was. Maybe next time risk level 8 is where the peak would be. So this model can have a dual purpose in that regard. All in all, again, right now as the asset is close to its fair value, not just based on the regression model but also based on the time weighted average price model, I personally not doing any major DCA or dollar cost average at this level, with the hopes that 2026 in the later half, with that 40% drop from the time weighted average price. This time weighted average price is a growing function. Today it's at around $86, and all of these charts are live and get updated every 24 hours. That means whatever the time weighted average price would be based on the current price, either it goes down based if the price action is going too down in the bear market. So for example, time weighted average price in 2022, at the beginning of 2022, was at around $57 in May of 2022. Back in October, November 2023, it had dropped to $44. But it is very dynamic in that regard, that it provides whatever the live functionality of that asset prices and how it relates with the entirety of its lifetime. And right now, as it is very close to its natural state and not in deep value zone, personally speaking, not any DCA at this point, but again, keeping a close eye with respect to how this matures with other assets such as ETH. How is ETH doing? Again, it's still above its time weighted average price. I would expect ETH also to be at the bottom of the bear market, be slightly lower than its time weighted average price. Bitcoin doesn't go lower than the time weighted average price, but again, it has to be at least in risk level 4 or 5. Right now it's at risk level 7 with respect to its time weighted average price model. So this also informs what Sol could do with a theoretical bear market bottom for Sol. As you can see over here, the theoretical base bear case is roughly speaking at around $47. That's about 43% lower than the current price of about $84. So that's the base bear target as a confluence of all of these individual models that we discussed: the regression model, the time weighted average price model, and the 20-week simple moving average price based model. The weighted risk is at around 0.44. That's why the base bear case is about 43% down. If there is a panic in the market, that $40 level for Sol could come into play in later half of 2026. With that, I would like to conclude on a hopeful note. If everything were to go well for Sol, again, these are some outlandish goals for Sol. If it were to survive and thrive in the next alt season, that's just keeping it as a cliffhanger, not stressing too much on the weightage of these models. That's how the price action could go if everything goes well for Sol. But the logical bull case target for Sol, if you were to try to extrapolate what the behavior for Sol could be in the next bull run, again, the 3 standard deviation ceiling could come into play at around $520 in the next bull run. That's the logical, again, like what you can say, a muted target for the next 3 years if the market cycle stays bullish and if there is a decent alt season. A $500 Sol would be conservative, 800 would be optimistic. Which from the bottom of let's say $50, a rally to $500 would be about a 10x. A rally to $800 would be little over 15x. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.